Well, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, and I'm with John Jenkinson. What do you think we got today, John?
Well, these markets have faded just a little bit here since the overnight trade, and we've been talking about that and what's behind that. Let's look at the futures, and they're provided to us by bar chart. And we've got the September corn contract up 6 1/4 at 605 1/2. What I want to point out here is that we've gotten all the way up to 626 earlier in this session. December corn is up 4 pennies now at 592 1/2. So it just shows you just how much of a pullback we have had since some of those gains we saw earlier on. But keep in mind, we're working under expanded limits in the corn market today because of that limit higher move, the 40-cent limit we saw yesterday. August beans up 10 3/4, 14.40 3/4. November up 5 1/4 at 14.04 1/4. No expanded limits here because yesterday we settled well within the daily limits. Chicago wheat market for September down 5 cents. We've got all front 5 contracts on the lower side. Kansas City wheat much the same. September down 10 3/4. The December down 9 3/4. And as I mentioned, all of those contracts on the lower side. Minneapolis September wheat down 8 1/2 at 8.41 1/4. That's despite some of that drought that meteorologist Jeff Womack was just talking about up in the spring wheat areas. And we've got December cotton now up 136 at 86.26. A little bit of a turnaround there.
Well, I'd like to introduce now our guest, Chris Swift from Swift Trading. I don't know how he got the name of that firm, but we'll take a guess at that later. But Chris is with us to talk about what we saw yesterday. Chris, I mean, I think the biggest question I have for you is, what are you telling your customers? I mean, how are they handling this? I mean, again, 30 cents is the new nickel. I mean, how you got to be doing a lot of hand-holding. I know what that job is like. What's it been like? What are you telling them to do, and how are you kind of counseling them through this?
Well, it's been amazing what 24 hours will do, but we have anticipated the market to be trading higher to begin with. So most of my clientele in the feeding business of some kind or another are end users of corn. So we have been pretty adamant to have some kind of position on that would keep you long the market or keep you from having to suffer through any kind of major basis changes that we've had. And that's one thing that we probably note due to this rally. It's against, not too awful bad of a crop for the majority of it. It's against what the Federal Reserve did 3 or 4 weeks ago against raising the U.S. dollar, and we're still trading higher. So I have a feeling that this is the direction that the market wants to go, and it's really solidified between September and December. The likelihood of being able to harvest, dry down, and put in a deliverable position corn by September is going to be a little tough. But by December, we know we'll have all kinds of corn in it. So I think the one thing that I'm going to be looking for is some kind of division in a few weeks between that September and December contract, where the September is reflecting the current demand, the December reflecting the better new crop that's out there.
Do you think, Chris, that that big uncertainty window for the next 30 to 60 days, especially when we go through tasseling for corn, do you think that that's built into this market, or do you think we still have headroom here?
John, from what I understand, the corn crop is in fairly good shape. There is a percentage of it in that northwest corner of the belt that will have some yield impacting to it. I don't think you're going to see any corn dead or not unable to harvest. I think it will be just a yield issue, but so far the heat doesn't seem to bother pollination. I would be more worried about if it turned off really wet and started to rain during that pollination time frame. I think that would do more damage than it would if it just stays hot and dry.
All right. Well, you talked about the cattle. Let's do that next. We're going to get into those numbers. Stay with us right here on the Market Report. One of the things we do here in the market department here at the Market Day Report is we keep you up to date on the latest information. And this is brand new information from USDA. It's the beef and the pork cutouts here at midday, and it's lower for the beef. The choice down 298, the selects down 88. We moved 85 loads over in the pork cutouts. Well, the carcasses were up $1.10. The loins up just 55 pennies. The hams down $1.62, and the bellies up $8.97. Let's look at the futures. Live cattle. Now we've got the August for this front month now of the fats, and it's down a nickel at 122.67. But the October's up 17. The December is up 42. Over in the feeder cattle market, this market is stronger here today. August up 72 at 155.35. September feeders are up 50 cents And August hogs, down the limit now. $3 lower, $100, 25 cents. October down the limit. Chris, let's switch gears here for just a minute. What in the world happened to this hog market?
I have a feeling it's more news out of China. China has made several claims. We've seen several news items that say that they are back up to close to 98% of their total hog production. So with that, that kind of leaves that we're probably not going to have as many exports, and this morning's exports were not very good for pork. So I think that's what it is more than anything. Here in the U.S., these premiums are still high, and like I said, we've seen the cutout come down. Now the lean hog index has been dropping precipitously. So as it continues to drop, those futures may be in anticipation of those further drops in the index.
Chris Scott here. You know what? I think I'm going to give you the gold medal for the day. All the guests here, the first one that mentioned something that really we don't talk about as much, right? Those outside markets, what the Fed might have done with interest rates, what's the dollar doing, and then say, what's China doing, or geopolitical things like that. How much do you think, say, the geopolitical, the dollar, interest rates, all of those things have affected this protein market?
The protein market, probably not that much. Although we do rely on our exports for beef and pork, it probably hasn't. Our exports just aren't that big to the industry. We still consume a majority of it domestically, or we trade with Mexico, who has a very wide margin on their currency relationship to begin with. So I don't think it does much on the meats. I think it was an absolute knock your feet out from underneath you to the grain markets, because that's what we do. We grow grains for export.
All right. Well, Chris, thanks a lot. Sure appreciate it. Janet, back to you, ma'am.